Hello, good afternoon. You're watching Market Fatafat on ET now with me, Vinny Motiwala, along with me, Shrishti Sharma as well. But one stock that we're going to talk about today is a Tata Steel. That's the one that has been in focus. That was a good show that was reported by the company yesterday in their Q3 numbers. As of now, the stock has given up most of its gains that we saw during the morning session. But yes, let's actually go across and listen into what the management has to say. We did have an exclusive chat with TV Narendran. My colleague Ajay Sharma caught up with him. So let's understand what's the outlook forward for the company in terms of Tata Steel. Let's go across and listen in.
Basically, the India business has continued to be quite resilient. It's been a challenging quarter. Demand in India has been strong. There have been margin pressures because of international steel prices. But I think operationally, we've had a strong quarter. We've had good production. That's helped bring down costs. In Europe, we have two businesses, as you're aware. The Dutch business is going through a few challenging quarters because of the blast furnace relining going on. So only one of the two blast furnaces were operating. The blast furnace which is being relined is going to start next week. So you will start seeing better quarters from Netherlands because that has been a big drag for us. Normally, Netherlands contributes positive EBITDA and positive cash to our numbers. UK has always been a challenge. We've announced a significant restructuring, which we expect to play out over the next 6 to 9 months. And the benefits of that restructuring will be visible only after we complete that in the next 6 to 9 months.
Right. So what essentially you are saying is that UK may remain soft for some time, but Netherlands will start contributing back in the coming quarters.
That's right.
Right. Okay, let's shift focus to India business. There was very good margins also this time in India business. Do you think this kind of a good performance from India business is sustainable in next few quarters as well?
I think it is sustainable. It will be challenging, but it's sustainable because good news is demand is strong, like I said, but prices are still a bit fragile, reflecting what's happening in the international markets. But I do expect that, in China, there will be a little bit more stability going forward because either they will cut production or reduce exports, in my view. Because this is not sustainable. The Chinese steel industry is not making money at these prices. So we expect some changes there, a little bit more discipline coming from there. So that's the way we see it. I think, so I think we do expect to maintain this level of performance in the coming quarters.
Okay, so within this performance, which is good in the India business, Chinese imports, because the demand is good, Chinese imports are also hurting the industry even when realizations are going up. How is this issue a bit of a drag in overall good environment in India business?
So it is having an impact. So what happens is, we are obviously impacted by higher raw material costs because when China produces a lot of steel, the raw material prices stay high. So you see iron ore prices and coal prices staying high. Because of that, there is margin pressure on the Indian steel companies, not just Tata Steel. And then when we try to push up prices, the threat of Chinese imports is there. So that's why, we've struggled a bit. We've represented to the government. I think everyone is watching how much of imports is coming in. It is increasing a little bit, but if it stays at this level or drops, then maybe things under control. So we're watching the space because in 2015, when China was exporting 10 million tons a month, we did appeal to the government and we got some support. Now China is exporting about 8 million tons a month, so it's pretty close to that. So let's wait and see what happens in the next few months.
Okay, that was the management of Tata Steel for you all on the show. But let's move on and talk about all of these other stocks that have been buzzing in trade on the back of news flows, technicals. Let's not forget a whole host of earnings that have come in as well. And on the technical front, let's bring on board Arpit Beriwal. Obviously, my co-anchor's there with me, Shrishti, as well. So Shrishti is there, as well as we do have Ankita joining in with us from the research team as well. So very good afternoon to all of y'all as well. Let's just take a quick look at 1 second in terms of the markets as well. Nifty almost trading at the day's lowest point again as of now as well. 21,276 is what the Nifty is trading at. Nothing exciting happening in the markets as of now. It's expiry day as well. So yes, as of now, Nifty down 0.8% in trade. Similarly for the Sensex too, similar trends, down 0.9%. But let's get started. And the first stock for today that we're going to talk about is Aarti Drugs. Now this one is in focus today on the back of its numbers. Like I mentioned, whole host of earnings. We'll be covering all of them today. So yes, Aarti Drugs on the back of its numbers is under pressure today. We're clearly seeing this pressure coming in because the top line of the company has seen a fall of around 14%. That's the revenue coming in at only 538 crores. And this decline is on a year-on-year basis. When you're looking at it in terms of the net profit of the company as well, that's down almost 13.9% as well. While in terms of the operating performance, nothing exciting happened on that front as well. EBITDA down by 13.4%, while in terms of the EBITDA margins of the company, that came in at 11.7% versus 11.1% versus 11%. So yes, very flat in terms of the margin front as well. So yes, top line, bottom line, clearly seeing some pressure, and in terms of the EBITDA, that also not anything exciting, keeping the pressure on the stock, and that is today we're talking about is Aarti Drugs.
All right, moving on to the next counter then, and Arpit, coming to you to have your take on L&T amongst the market volatility. This stock is seen to be holding itself, trading above its 20-day moving average as well. Are you still positive for more upside on this one?
Yeah, very good afternoon, everyone. So talking about L&T, so in spite of market weakness, if you look at the L&T chart structure, so it is in an overall uptrend. It has been the biggest outperformer within the capital space goods. On monthly setup, it is very strong. On weekly setup, it is forming higher highs, higher lows. On daily scale also, it is consolidating from past 15 days in a broader range between 3500 on the downside, whereas on the upside 3650, 3670 zones. It is perfectly holding above its 20-day mark. And in spite of market weakness, market is down, Nifty is almost down by 600, 700 points from all-time high. Bank Nifty is down, but it is holding very strong. So looking at the overall chart structure, from here on also, we can expect outperformance in coming weeks. So one can continue to go long at L&T at current levels or on minor dips towards 3600 level, with keeping stop loss of 3450 for an upside move towards 3700 levels, 3720 levels.
Okay, let's move on. That is L&T. Keep an eye out on those levels over there. Let's move on, talk about Balkrishna Industries. This one is in focus on the back of numbers, con call highlights that have come in as well. Ankita, could you take us through all of that, and in terms of what's the stock doing?
Well, yes, Balkrishna Industries is in focus today, and it is coming on the back of the fact that it has posted its Q3 results. In fact, it's knocked down 7% in trade right now. Let's look at the results first. Now, Balkrishna has reported, a revenue uptick of 5% on a year-on-year basis, with a margin, rise of a good 100% on a year-on-year basis. The net profit has also given a solid jump of 181% on a year-on-year basis, and the margins have also seen an increase of almost 1,100 basis points on a year-on-year basis. Plus, the other news that came in was that Balkrishna has also approved a merger of BKT Tires with itself. Now, let's look at the management commentary that's come in. Management con call had also happened, and there are a couple of highlights here. There's no guidance given this time. They say it's too early to comment on the volume guidance for FY25. They're sitting on the backlog of geopolitical tensions. Geopolitical situations may have an impact on the margins in the short term, and it is really if the shipping scenario continues, the inventory may slip to an uncomfortable level. No price hikes are expected in Q3. It will take up to 2 quarters to pass on the cost to customers. They don't see any cost benefits going ahead, and the Q4 volumes are to be absolutely flat as compared to last year, and probably back on the back of the management commentary perhaps that has spooked the market. The stock is down 7% in trade today.
Well, yes, no guidance given by the company was the big dampener. But moving on, let's shift focus to another stock under pressure, that is Laurus Lab. Post the earnings, this counter is seen to be drifting lower by almost 8%. Now, a big cut coming in on the earnings front, and for the straight sixth quarter that we are seeing a disappointment from Laurus Lab, when the net profit has missed the estimates by as much as 80%. Other than that, onto the con call highlights, not much of an excitement there, because API sales were impacted by the transitory shipment impact and the subdued pricing in the other APIs. The net debt is seen to be increasing by another 500 crores this time around. But onto the outlook, the company is positive that Q4 could be better versus Q3, but it's indeed not giving any confidence, because the street estimates for 180 crores of profit. The company reported a mere 23 crores in the bottom line, so that's definitely what the investors are not liking about Laurus Lab, and the stock is also seeing no recovery since the day's lowest point.
Okay, On that note, let's just quickly take a look at the flashes on your screens that are coming in. IGL's numbers that were reported as well. Profits have seen a decline of around 27% on a quarter-on-quarter basis. Even the margins have seen a decline as well on a quarter-on-quarter basis from 19% last quarter to a 15.9%. So pressure that has come in on the stock as well. HPCL too reported its numbers short while ago. Nothing exciting happened there. But on that note, let's just slip into a very short break. Don't go anywhere. We'll be back with more stocks after the break.
Welcome back to Market Fatafat, and let's keep it going with all the counters that are buzzing as of now. And Arpit, coming to you for the next counter, and that is Hind Copper on the charts. Though the metal pack is quite weak today, but Hind Copper almost up around 3% in trade. How are the charts looking like for this one?
Yeah, talking about Hind Copper. So if you see last month we have a classical breakout above 185, 190 levels. This week from past couple of weeks it is trading in a broader range between 260 to 295 zones. On daily scale also, it is on the verge of giving consolidation breakout above 285 levels, and it's perfectly holding above 20 DEMA. So in spite of market weakness and choppiness, and though the metal stocks are down, but Hind Copper, the relatively outperformance is quite strong. A relative strength index is also on the verge of the breakout and holding above 75 levels, which indicates overall strength in the counter. So looking at the overall chart setup wise, it is quite strong, and we're expecting good 5 to 7% upside move from current levels. So one can go long at current levels or minor dip toward 275 levels with keeping stop loss of 265 for an upside move towards 295, then 305 levels.
Okay, 295 and then 305 levels is what one could watch out for Hind Copper. That's the word from Arpit. But let's move on, talk about RailTel then. This one is in focus on the back of its numbers. When you look at it in terms of the revenue growth, a strong growth of 47% on a year-on-year basis. Look at the stock price as well, right? Holding on to very strong gains after its numbers. Operating performance, a good performance on that front, a bit up almost 60%. Margins also seeing an expansion of around 150 basis point approximately on that front. While in terms of the profits of the company, a strong growth, almost doubling in terms of profit from 31 crores last year to 62 crores as well. So clearly, RailTel has seen a good performance coming in and a good run up that we're seeing in the share price today as well. Trading with gains of almost 12% as of now. Last 5 days seeing an up move of almost 22%, and in the last 1 month as well, almost in last 6 months more than tripling in terms of the stock is what we've seen already for RailTel. But today the run up is also there on the back of a good set of numbers that was reported by the company.
All right, shifting focus to one of the counters from the power space that has been holding up well, that is Tata Power. Arpit, on the back of the news flow, we did see some resilience for Tata Power, but which are the next levels that you are tracking?
Yeah, so talking about overall power space, so Tata Power has one of the outperformer. So looking from a technical structure, monthly setup is quite strong. It is forming higher highs, high lows from past 4 months. On weekly scale, it has been consolidating, but overall the base of the stock is shifting higher. On daily scale also, it is perfectly holding to 20 DEMA. So in spite broader market is down, mid-cap index is down by 1%, but Tata Power is still holding its gains. Its major support is near around 345, 350 levels. And looking on the overall chart setup also, it is quite strong, forming a strong bullish candle. So another 6 to 8% upside move can be seen from current levels towards 380, 400 levels positionally. On immediate basis, 380 is a target with keeping stop loss of 352 on closing basis.
Okay, surely keeping an eye out on Tata Power. Let's move on and talk about HPCL because yes, HPCL is in focus on the back of its Q3 numbers. We have seen a bit of a fall that has been coming in for HPCL as well. As of now, the stock is trading at the day's lowest point. Somit is joining you, Nitas, to give us the number crunch. Okay, so yes, when you're looking at HPCL's number, let me just take you all through the numbers that have come in from the company. The profits of the company also have not seen anything in terms of a move that has come in. The profits have in fact seen a bit of a decline this time, a sharp decline in terms of the profits of the company. Margins of the company also seeing a decline coming in as well. From last quarter to this quarter also a sharp contraction. Somit, you've done some number crunching on that front. We're seeing clearly a sharp fall coming in terms of the profits of the company for HPCL. What are the other factors that are there that are actually impacting HPCL's numbers?
Well, for HPCL, if you see more than the weak set of numbers that the company has reported in the third quarter, it is the higher expectations that was built into the stock ahead of the result. Now, if you see the numbers of HPCL, the net profit number that the company has reported for the third quarter is literally 1/3 of what the street was expecting. Street was expecting the number to be close to around 1600 crore rupees, but the company has actually reported a net profit of just 530 crore rupees. And on the EBITDA front, if you see, however, the miss is a bit lower than what the street was expecting. EBITDA number has come in at close to 2,200 crore rupees, while the street was expecting this number to be anywhere close to 2,500 to 2,600 crore rupees. Now, the reason behind this miss in the numbers for HPCL is the fact that the company's marketing margins were a bit lower than what the street was expecting, and also inventory losses were marginally higher than what the street was expecting. Now, if you see Indian Oil Corporation numbers that came in yesterday, there was a surprise profit coming in from the inventory side. Now, analysts were expecting the company to report an inventory loss, but actually Indian Oil Corporation had reported an inventory gain. So a lot of expectation from HPCL was also that there could be surprise inventory gain coming in the numbers, but that did not happen, and hence we are seeing such kind of a disappointment or such kind of a sharp down move in the share price of HPCL. Apart from that, on the dividend front, if you see, post Q2 the company did not announce any dividend. So for the third quarter, the street was expecting a big dividend amount, anywhere between 30 to 40 rupees per share, but the actual dividend amount coming in from HPCL side was just 15 rupees per share. So higher expectations built in ahead of the earnings, miss on the earnings, and lower than expected dividend is what led to this fall in the share prices of HPCL in trade today.
Well, thank you so much, Amit, for making us understand that why HPCL is down about 6% in trade as of now on the back of the earnings and the dividend announcement. But with this, fears, it's time to slip into a very short break. Don't go anywhere. We'll be right back.
टिप चाहिए